Hey guys, what's up and welcome to a new Tesla update video. So today, as usual, let's go over the market. We had that FOMC meeting. The minutes, and of course, Powell speaking himself concluded not too long ago. But yeah, all in all, that was a pretty big day. Some pretty decent moves happening today for the most part. A lot of ups and downs. A pretty volatile day for the most part as well, even though the VIX is only up 3%. However, that is taking into consideration that the VIX is also bouncing off pretty beautifully from this low over here. So yeah, the VIX is looking like it wants to continue rallying a little bit, probably closer to like 23, 24, I would say at least. We'll see where that takes us. I mean, it really feels like the VIX, this is what I personally think, and this actually goes in with what I said earlier. All right, the VIX, you can't see volume, right? Yeah. All right. So, okay, before we continue, as usual, guys, if you enjoyed the video, don't forget to hit that like button. If you find it useful, informative, helpful, whatever, and of course, this is not financial advice. I am not a financial advisor. Do your own research, do your own, make your decisions, all that good stuff. This is all just purely for entertainment purposes only. But all that being said, ladies and gentlemen, so I pretty much talked about how I personally believe after pretty much the event today, if you will, we will get a bit of a retrace. For instance, like on Tesla, I think we will come down probably around to the 21 EMA slash gap fill, right? Anywhere between like this 187 to 180 kind of 3-ish area. I do think we'll come down to that level. And I do think that most likely will happen tomorrow, even potentially, right? And I do think that there's a pretty decent chance that we will bounce from there and then rally up, potentially even as high as like 210 to even 215, right? Potentially. Again, you never really know, but that's definitely a potential. I'll give you guys my two main paths. And then, yeah, I think from there, obviously the market will more or less follow, give or take, of course. Now, that also kind of coincides with what I think the VIX might actually do with this, fairly bullish bounce off the VIX, on the VIX rather, from down here. I do think there's an actual decent chance that the VIX will potentially come up to somewhere around, maybe 23 or so, maybe even as high as 24, which will essentially, potentially tomorrow, which will be that move to the downside. Because keep in mind, guys, almost always, not always, of course, but usually, more often than not, VIX up means market down, VIX down means market up, right? More or less. That is kind of like a basic general rule of thumb. So if the VIX is going to go up to, let's say, 23, 23 and a half, or, whatever, give or take, that means that the market most likely will be going down during that period, which of course is, I think, perfect for what I just talked about, how I personally believe Tesla will come down to somewhere around this level right here, in the mid 180s, let's just say, to make it simple, right? With the VIX, of course, going up to, like I said, 23 and a half or something like that. Now, I think the VIX will most likely get rejected here and most likely make its way down somewhere around, potentially right here as well, which that move right here naturally will be the move that Tesla will do. So again, that's the first move of the VIX, and then Tesla will most likely do something like this, right? Which is literally the opposite of the VIX, right? Which makes sense. Now, that's kind of what I am personally seeing. That's like just a very basic, just like a super quick TLDR of what I personally, wouldn't be surprised to see happen moving forward. Now, we did talk about yesterday how I personally believe, again, after FOMC and all that stuff today that we had, I do believe that we will get the rich base into that 21 EMA. Now, mainly because of how Tesla, so I readjusted my, we're still in a really weird situation where it's a little difficult to really say with a lot of certainty right now. Like a lot of the things I'm currently predicting right now, it's not, I wouldn't say I'm extremely high in certainty for the short term in terms of the movement. I still strongly believe that Tesla, again, back when we were here, I was calling for a crash and we got a crash right here. And I still think we'll go even lower, right? It's to me, it's not a matter of if, it's really just a matter of when. I really do strongly believe that, right? And yeah, sometimes the market will take a lot longer to, maybe make a certain move happen than usual. And what I've noticed with my personal predictions is that I'm always predicting like a week or two early. And I'm not saying these moves that it'll crash tomorrow. I'm not trying to say that. When I say successful crash, it doesn't mean it has to happen tomorrow or the day after. I think it'll happen in the pretty fairly decent future, but doesn't mean it has to happen even up to the next week, right? Just keep that in mind. But with that being said, because of the movements, I did adjust my perspective here, if you will. This kind of, arguable bear flag that we were in, right? So there's two ways you can look at it. And this is why the situation is a little bit like, tricky. So first situation, and the first, I guess, way you can look at it is like this, right? Both ways are more or less, the idea is similar. It's just whether or not, it determines how bullish or not bullish potentially, or how much room to the upside is still potentially remaining in this, current situation that we find ourselves in, right? So essentially the way I look at it is this is the first way, right? We came down, started making, like a bear flag, a dead cat, whatever. We fell under, came back up, retested it several times, and you can see it's like almost perfectly getting, supported here and now perfectly getting rejected here, followed by now this move to the downside. That's number one. Or if we remove these lines, so for instance, let's say we remove these lines for now, you can also technically easily look at it like something this, right? Where you have this line here, and then you have something like this here, right? You can easily look at it like this as well, right? Whichever way you want to take a look at it. Now, this is why this situation is a little bit finicky, because you can easily do this right here, right? What does this mean? Well, this situation, if you look at it like this, tells me the fact that, what I just said, we will most likely come down to around the 21 EMA, which is around the mid 180s, which is pretty much exactly where the bottom of this trend line is that we bounced here, right? We're inside this little, still a bear flag, still essentially like a dead cat bounce, but it does show more obvious support also around the 21 EMA that I just talked about, where we can come down to potentially get a bit of a bounce, potentially make our way up. So I'll draw it very quickly here. So come down here. This is that level I just talked about recently with the 21 EMA, mid 180s, right? Gap fill potentially. And then from there, there's a decent chance that, assuming we break above 200, of course, which is important, but if we do, there's a decent chance that we move up to the top of this channel one final time, somewhere around here, which will put us somewhere around that, 210, maybe even as high as 215 level, right? Potentially overshoot a little bit, and then most likely get slapped back down very aggressively if we do overshoot to 215. I do think it'll get slapped back down quite aggressively. But this, is definitely an opportunity, a perspective to have. And then I think from there, we'll actually collapse and this bear flag will ultimately play out. But what this means is the fact that we're getting several touches. We're getting a 1, 2, 3, 4, 5, 6 into a 7th breakdown touch. Usually these things play out in a 5-point touch. 1, 2, 3, 4, 5. So, keep in mind, right? There's a decent chance that we just come down here and just completely break as well. That is a possibility. In a market like this, right, it's extremely difficult to say with absolute certainty, especially in the situation that we are in right now, the short-term movement, right? The idea is that I give you guys the levels to watch out for so you can make that final judgment yourself, because that's the point of these videos. These videos aren't to tell you exactly what to do, guys. Here's the level, here's this, do this and do this and do that, right? The idea is to give you the way I like to look at it is I'm almost like building the framework of the painting, but you have to fill in the actual painting itself, right? I'm just building the framework for you guys, or at least trying to help you guys build the framework of the painting. But you have to actually fill the contents, the painting itself. You have to draw the painting yourself, right? That's the most important way to realize it, right? But regardless, this is easily another way and another perspective to look at it, right? Personally, I think there's a pretty okay chance that we bounce off of here and move up one more time. Again, relative to what I was talking about yesterday, how this move over here that we're experiencing as of right now is extremely similar to this move right here. And I personally believe that this right now, today's candle, is essentially in this move that's, again, almost like scaringly like identical to what we're experiencing. I think we're pretty much like right here right now, give or take, somewhere around this level right here, where I think we're pretty much working on this drop down right here, which I think potentially we'll have one more red day tomorrow. This drop down will come down to mid 180s, and I think from there we'll get a bounce similar to what we had here, and then make our way back up like this, which will of course make our way back up here like this as well, similar move. And then I think we'll consolidate for a tiny bit before most likely Tesla and the market itself most likely collapsing pretty aggressively to the downside. Again, that's just an option, right? That's just a possibility. So keep that in mind, ladies and gentlemen. But that is kind of the main thing I am personally looking for right now. But again, like I said, there's absolutely a possibility that we just don't even hold this support. So again, this is why you want to put this on your own charts. Like, you don't want to just listen to me and just like, oh, this guy said that, I'm just going to do it and blindly follow because, I can't think for myself. Think for yourself. It's really that simple, right? I mean, it's not, but it should be, at least in a way, right? You should put in the effort, I guess is what I'm trying to say. But you can easily draw something like this right here, this little bear flag situation that I just have right now that I literally just drew for you guys on your own chart, and follow it as well. If it breaks down underneath these levels and 185 fails to hold, for instance, that's going to be most likely a bad sign, right? If 185-ish seems like it's holding, then there's a pretty decent chance at the very least we'll come up to 200, if not most likely all the way back up to 210, even as high as 215, right? You have to take these levels into consideration and act accordingly. In case you're wondering what I am personally doing, pretty much right before I started recording this video, I ended up, so I told you guys before, I bought to close almost all of my cash secured puts. I had just a couple left that I kind of left as runners. The vast majority of them, almost all of them, I did close out for obviously a profit, about 50 to 70% on average, which is okay. I did want a little bit better, I'll be honest. If I held it a little bit longer, for instance, it would have been better, but it is what it is, right? And right before I started recording this video, I sold just one cash secured put, 180 cash secured put, 180p for next Friday. Not this Friday, the one after the end of March, right? Just one. And the reason I'm only doing just one is because, again, in case we just somehow miraculously bounce literally from here, which I don't think we will, but in case we do, cool. now I have a little bit more skin in the game to the upside. If we continue coming down to this level and come up to 185, I most likely will sell another cash secured put, and I will most likely leave it at that. If we bounce, I will have the current ones that I have already open, plus the one I opened today, plus potentially tomorrow, to ride up this momentum to the upside before I think the major downturn really starts happening again. If we collapse from here, well, I have substantially more cash secured puts to sell, so I am still leaving myself extremely open, right? So if I were to compare it as to like technically this cash, if you count these cash secured puts as being in the market versus not, I am probably like maybe 20%, if even that, maybe 15%, honestly, currently in the market, and the rest, of course, about 80 to 85%, pretty much cash. If not, honestly, if not more. I didn't do the exact math. I'm just taking a rough guess. That is my current positioning, and that is how I am currently playing the situation. I do believe that there is a pretty damn good chance we will get a bounce and go up even higher, but I'm not confident enough to go aggressive in it, which is why I'm leaving myself open to potentially more downside, but not also in a position where I will miss this upside run fully, right? That's the way I look at it, and that's the way I'm doing it with my personal positioning and the way I am trading it. Take it as you will. Right? Don't care if you like it, agree, disagree, could not care less, just sharing my opinion and my trading publicly, I guess, if you will, right? But that's kind of what I'm seeing, guys. So let me know what you think down below. The Bollinger Band, taking a very quick look, you can see did expand a little bit, but overall it's kind of going sideways for the most part. Nothing too crazy. But 21 EMA, like I said, right below us at pretty much 187. So again, I expect that 187, 185, give or take, that level should in theory hold, and it will be important to hold if you want to see that move up to at least 200, if not all the way up to like 210/215. Very, very important. We're also above the 5 and the 10, which is a good sign, and you can see the 10 is actually pretty much right below us at pretty much 21 EMA as well. And of course we have the 50 and the 100 well below us, which I don't really want to touch, but we did flip the 50 back over the 100, which is not a damn bad sign, to be completely honest, right? The fact that the 50 recrossed the 100, not bad, honestly, not too shabby for the bulls. That is definitely more positive than negative, that's for sure, right? But that's essentially what I'm seeing, guys. Again, positioning myself for potential upside, but also getting ready for in case situations don't hold, like I just talked about, and we get a natural true collapse back down, which I still think will happen. It just doesn't mean it has to happen just yet. But that's what I'm seeing, guys. Let me know what you think down below. Thank you all so much for watching. If you did enjoy the video, don't forget to hit that like button. But again, thanks so much for watching, guys. Hope you found it useful, helpful, or whatever. And I'll see you tomorrow. So until then, have a great day. Peace.